Okay folks, so I want to talk about one specific play, a fairly cheap play that ARK bought just yesterday, that in my opinion is getting to the point where it seems like an obvious buy. But first, of course, I want to update you on our biggest winners, our biggest losers, and some updates on our main plays and what's going on. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Also, this video is sponsored by the kind gentleman at ZipTrader U. If you'd like to learn how to trade with our step-by-step video lessons, our private chat, and our daily morning briefings where we discuss what's going on in the market each and every morning, well, I'll go ahead and put a link to ZipTrader U below. YouTube 15 will get you 15% off at checkout. Okay, so let's do some quick congratulations on some of our winners today. So on Wednesday's This Will Double video, we talked about WiseKey. WiseKey is the company that has the NFT digital certification platform, where you take a picture of a physical object and it uses the blockchain to secure that object. It was up a lot on Wednesday, and at that time we said we see another dip coming and that we should wait to get the next dip. And luckily it was already dipping at that time, and it continued to dip into the pre-market. And then today we got another massive rally going from lows at $13.59 to over $20 before dipping once again. As you know, these are high plays, and like I said the last couple times I discussed these plays, you want to make sure that you're not just holding and hoping with these. You buy in at a dip, you lock in profits on the way up, set a trailing stop loss, whatever you want to do, and then you rinse and repeat when it goes back down again. Also today there was a lot of sketchy Chinese education companies running. This was after the IPO of Chinese education company EEIQ and the huge run that happened with that. Well, that brought a lot of attention onto the Chinese education sector as a whole. So this morning I went ahead and highlighted one of the plays of the sector that I thought could run up as a sympathy rally. I said in the morning, Wafu, pump and dump rally with the rest of Chinese education stocks. Will it happen again? And in this case, it did indeed happen again, going from 8 to 21 at open. Key with these short-term plays, if you're going to mess with short-term plays, is you have to have a clear idea of what you're dealing with. Some are going to run, some aren't. So you have to control your risk on the ones that run and the ones that don't. No one wants to be caught dead holding sketchy Chinese online companies. These are chart plays, these are hype plays. Treat them like you would a sketchy motel. Use it for its damn convenience and then get the hell out. Okay, next, I want to talk about SoFi. SoFi, which isn't public yet, but is going to be going public via ticker IPOE. Well, they announced that they will be giving amateur investors a way to have access to IPOs before they go public. Robinhood is actually going to be doing this as well. This is a big deal, folks. Traditionally, it's only been institutions and people with ultra high net worths that could get into the pre-IPOs before the rest of us could even buy it on the public market. This is a big advantage because if it's a much hyped company, obviously the stock's going to go to the moon after it goes in IPOs. So that basically further created a divide between us and the elites. So in my opinion, any company that manages to break down these barriers, that gives us more equal footing with the other players in the market, well, they deserve a round of applause. Yes, that means both SoFi and Robinhood. Don't clap too long for Robinhood though, you might upset Citadel. In terms of bad news, NIO announced this morning that they have shut down their factory for 5 days due to the global chip shortage. And they lowered their outlook on vehicles even further. So this isn't anything super new. We talked a few weeks ago about how there's a global chip shortage and that how NIO is going to have a few bad quarters. And then after the chip shortage ended, we'd have a decent rebound for NIO. However, the fact that it's so bad that they had to literally shut down the factory for 5 days really highlights how bad this chip shortage is. And it's not just NIO. We've seen a lot of other companies. I saw a notification from Ford that they did a similar thing. There's companies all across the board suffering from this. Here's the deal though. After the chip shortage, we're going to have a lot of quarters where we can grow massively quarter over quarter. Once that supply chain issue is solved, NIO is going to have a huge bounce back. And so I would be looking at the numbers in fall 2021, early 2022 in terms of what NIO is going to be doing. You're not going to see very good numbers until then, but once that happens, you're going to see a huge rebound. Right now, the stock market is very, very, very short-term thinking. So we'll keep our eye on NIO, but I think we're going to be sitting very, very pretty towards the end of the year with this play. Okay, now it's time to talk about that specific $18 stock that I see a lot of potential in, and that is Skillz. SKLZ. ARK bought this guy as recently as yesterday, and this is a company that is down more than half from all-time highs. Partly because of the overall market rotation, but also because of a short seller report put out by Wolfpack Research and some bad timing with insider selling also causing a panic. So what does Skillz do? We've talked about it a little bit in the past, but we haven't really done a huge breakdown. Well, they are in the mobile gaming space, the gaming of the mobile. But they've put a very interesting twist in that you can actually win cash prizes with their games. But it's not exactly the same thing as gambling. It's not like going to Vegas and playing the slots. The Skillz platform actually has games that require skills to be built. Games that you can learn a skill with and get better at. That way your cash prizes are based on your skill set and your effort instead of random chance. But essentially, Skillz offers a multiplayer competition platform for a number of iOS and Android games, which players use to compete in competitions against other players across the world. Now, if you're a game developer, you can use the Skillz platform to easily turn your game into an international competition where you can then monetize it and people can win prizes. Why would you do this? Well, because ad-based games only return $2, but Skillz-based games return $6. So Skillz offers a premium on your developing, creating an incentive to put content on the platform versus other platforms. Now, one of the metrics that is important to measure when it comes to social media type platforms is engagement, because the more engagement you get, the more opportunity you have to make moolah. Skillz reports that compared to platforms like TikTok, Facebook, YouTube, Snapchat, and so forth, Skillz outranks them with 62 minutes of average use per user per day. And the mobile gaming average is about 17 minutes, arguably the more relevant metric here. In terms of demographics, they have a pretty decent outlet. The biggest chunk coming from 26 to 35-year-olds, 36 to 45-year-olds, and 46 to 55-year-olds. That's a good age demographic because these are the people with money. If you get really, really young, you get to the situation where they don't have any money to spend, and then your whole business model is But again, what really makes Skillz special and what really sets them apart from the competition is their approach to monetization. You pay a small fee to enter a tournament or competition. Skillz takes a chunk of that, gives a chunk of that to the developers, gives a chunk of that back to you in terms of cash prizes if you win, and then profits the rest. They also make money from sponsorships and in-game ads as well. But it's important to focus on the main crux of the business, the Skillz part. The Skillz name is intentional because the games that you play on the Skillz platform are ones that you can get better at over time. So as you develop and fine-tune your skills, you have a higher chance of making money. That takes a lot of the element of chance out of the game and makes it so that this is less gambling and more skills-based earning. And that's how they get rid of the gambling regulation for the most part. For example, chess or pool or bowling, those are three different games that have a lot of skill involved in them. Whereas something like the slots or roulette may not. Okay, this sounds great, Charlie, but show me the money. How do we know this actually works, Charlie? I don't want to hear good ideas and poor execution. Well, in terms of results, in their last earnings call earlier this month, they reported 95% year-over-year revenue growth. If you look at their revenue growth quarter over quarter since early 2019, you could see a very consistent trend. They reported 121% year-over-year paying MOU growth or MAU growth. That means that the number of users that entered into a paid contest on their platform has been increasing massively. And this is important again because that's the basis of their monetization. Very, very consistent, and it's really sped up in the pandemic. It'll be interesting to see how this does post-pandemic, but obviously the trend is very clear. Maybe you get some dipping and then you see that overall uptrend. So anyways, I'm very excited about this play. This is really the first platform, or at least the leading platform, that has a solution to make really any skill-based game into a real money competition and tournament. That again incentivizes not just users to play, but also developers to develop. The more you pay, the better developers you get. And the better developers you get, the better games you get. And the better games you get, well, the more users you get. Okay, now for the requested ticker of the day, Vuzix. Quite the doozy. So Vuzix dropped on their share offering announcement today. Vuzix is one of our plays that we've talked about a lot in the augmented and virtual reality space. They don't just have out their concepts though. They actually are using their reality in the present with many commercial applications. They have very strong projections for 2021 with revenues expected to rise 88%, and 2022 revenues expected to grow 87%. Pretty damn bold numbers. But again, share offerings are sort of the landmines when it comes to growth stocks. You're going to step on them sometimes. It's just the reality. Small, no-name companies that are growing substantially, well, they need to raise capital. And one of the ways that they can do that is share offerings. However, if the share offering can be used to create more shareholder value over the long term, then that's okay. If it's just an exploitation of a rising share price, that's a whole nother issue. In this case, I think that Vuzix is going to be able to deliver a lot more value to us, so I'm not too worried about the share offering. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below. If you'd like to learn how to trade, would like access to our private chat and daily morning briefings, we'll go ahead and check out ZipTrader U in the comment section below or in the description below. I have a link. If you'd like 2 free stocks and you're wondering what broker to trade these stocks on, well, Webull is a fantastic broker, and I'll put a link to them below. And as always, have a great day, and I'll see you in the next video.